What's good, y'all? I'll be putting it up, starting things up in a second. I just want to get something right real quick. What is good, y'all? What's up, everybody? It's your boy D Fat Stacks, and today, welcome. Yeah, let's look up my. Let me get my shameless promotion out the way. We're gonna talk about that later. Make sure you guys check out the anime page. As you can see, we got a whole bunch of stuff in there. Y'all know right before I like to do Financial Corner, some shameless promotion. So, like I said, as you can see, we've also adjusted some of the prices of the stuff in there. I've also added some drinkware, some mugs. I got more mugs coming. And also some more anime figures are in here as well. So make sure you guys, I only ship in the US. So if you guys get stuff from this website, it's a lot cheaper than eBay, because on eBay I have to bring up the prices more because eBay charges me between their fees and everything else. So hence why on eBay my stuff is more expensive. If you come to the site and buy straight from the site, it will be cheaper. So, but yes, I do have a lot of stuff. So, all right, back to since that's out the way. Now, back to what we're going to talk about today. So, we're going to talk about various items, but first we're going to lead into with the videos like I always like to show with the supply and labor issues and why. And then we're going to talk about what the feds are going to do with the taper and everything. So, here we go.
Over 40% of the American workforce is in the market. They're considering new opportunities.
I don't know if you guys can hear. Oh no. Here we go again. I don't know if you guys can hear it.
The number one reason employees tell us that they're looking for better jobs, considering other options, is pay. Period. Better compensation. Employers believed that it's better benefits. Major disconnect. The employees who are left behind are saying, I'm not so sure I was being paid appropriately anyway, but now that you've added...
Sorry, I'm gonna start the video over again. I can't hear it in my headphones, but you guys can.
They're considering new opportunities. The number one reason employees tell us that they're looking for better jobs, considering other options, is pay. Period. Better compensation. Employers believed that it's better benefits. Major disconnect. The employees who are left behind are saying, I'm not so sure I was being paid appropriately anyway, but now that you've added 20 hours a week on my workload, I know I'm not paid properly. It goes downhill very quickly, leading to employee dissatisfaction with their employer, and then ultimately they go to the market and shop for a new job.
Meanwhile, you guys watch that. I'm gonna try to fix something.
It's critical that you have honest dialogue with your people manager about what it means. This is where empathy comes in, to say, listen, I'm carrying the workload of now 2 people, and I need some help. I need a break. I need your sensitivity. We've got to exercise more empathy. And that is really listening to employees when they come to us and tell us that they feel overworked. They're not just whining. Secondly, we've got to consider bringing in other resources. We've got to get, the contingent workforce to come in and support us in the.
But it seems like
this goes throughout the entire organization.
guys can hear it.
People managers, not just the HR department, have to be very focused on solving for these issues, because this is not going to go away anytime soon.
But as you guys can see, how they're talking about the reasons why people are leaving the workplace and everything else, for various issues, because they wanted to get paid more. But like I said, it's just one of those things that we talk about a lot that's been going on right now. And now we're gonna hear from these cats and the feds and what's going on with the feds. So give me one deal real quick. I'm trying to fix why I can't hear this stuff in my headphones. Give me one.
Let's bring in Steve Leisman. Steve, it's always good to see you.
And you, Melissa.
Here we go, y'all.
I want to start off.
Okay. Go ahead.
Go ahead. I was going to start off by throwing some cold water on this hot and breathless Federal Reserve story, just because I was thinking, and I want to throw this idea out, because I was just putting together some of the data here. And I'm looking at where the market's priced right now. And guys, if we just call out these full screens real quick, here are the Fed probabilities as of, I don't know, a few minutes ago. And the news here is obviously that the
and this is going to affect when it comes to
6 months the first rate hike. If you see there, pretty good probability of a June hike. As you move towards July, it's higher, and for sure by December. But it's the other one that's sort of more interesting, which is the probability of a second hike, which is the market started to price in a second hike. And obviously that's a big deal.
These are rate hikes now.
I'll talk in a second about what we might get from Powell on this. But if you think about it, if you take a step back, the Fed announces the taper tomorrow. What does that mean? It means over the next several months, it will be adding $660 billion to its balance sheet, okay, and reducing it by $15 billion a month. Big deal. Then it's going to maybe add, perhaps in this worst case scenario that the markets have suddenly repriced, 50 basis points, which is going to bring you where? Back to the first cuts that brought us down below 1% of March of 2020. So you got another 7 months of zero, and then maybe another 12 months of 50.
This is very important, y'all.
The bottom line is, if you told me that we're going to be adding to the balance sheet $660 billion with the taper going on, and the worst case scenario, which may not be the worst case, is that you're going to add 50 basis points to the Fed funds rate, I don't know. That helps me understand why markets have taken this repricing on the short end of the curve, kind of with a margarita and a lounge chair on a beach somewhere in Acapulco.
See, Steve, the problem is that you speak reason, and the markets are the markets. And I think that they're two different beings here, because the fact that we've already, just a month ago, that June hike was only a 20% chance. So we all know that Fed funds futures, or whatever we're using as this gauge of pricing in, can change on a dime. And it seems like tomorrow, Chair Powell, there is
turn it up a little bit.
Tape bomb that is waiting to happen when he talks about inflation potentially and whether or not this is transitory. I mean, it's all in how he characterizes.
Now, the feds are gonna start tapering, which means they're gonna be bringing back buying less debt. So usually once the taper starts fading out, once they completely done in their little stages, then comes the rate hikes. As you guys saw earlier, the possibility of rate hikes and what month they'll be in. It is imperative to kind of see that timeline, because you're gonna see the markets fluctuate with that timeline. And of course, once certain interest rates come back, you're gonna start seeing certain stocks dipping back down. Other stocks might be going up, aka you're gonna see the bank stocks probably rise up a little higher, because with the interest rates as low as they are, it doesn't really favor the banks. But as they get higher, as the interest rates get higher, they do favor the banks. So you're gonna see the financial sector go up higher as interest rates, as it gets closer to when interest rates are gonna go up. So, but let's hear what they got to say with the taper and interest hikes.
To say that this is priced in or that's
I mean, if you're a long-term investor, it doesn't matter, but it's still good to hear what is going on, what they might do.
You also speak reason, Melissa, if I might respond, and that is for sure that you never know when the market's going to internalize something and go a little crazy when it reads it. That is true, and I just think that the danger here.
Now, I will, before he even gets any further, the markets have been going up like nuts. So as you can see, the S&P 500 went up. The Dow was up today. Like, all the markets are in the green today. For the last couple days, I believe, the markets have done very well. You see what I'm saying? So we're going to go back to him when he's talking about the markets and stuff. So let's get back to him.
Is not what we see. The danger is what we don't know. I think Karen was maybe alluding to this. I'm not dealing with Seymour, who just told me he's going to go see Dave Matthews instead of my band on November 12th, but I'll deal with that later. But I think the issue here, I know, right? I mean, here's the thing. But here's the thing. The danger, I think, is what Karen was getting at, is that we don't see what the Fed has to do over time to bring inflation back down to 2%. That it's something worse than what we're looking at. But still, when you look into 2023...
All right, I'm going to stop here. When he talks about inflation... Now, remember, initially when the Feds talked about they're going to run, in the beginning, the Feds were talking about they're going to let inflation run a little bit hot over 2%. So after the markets, after a while, it's gotten above that. So there's certain things that is just not going to go back down so easily when it comes to inflation. And one thing is for sure is if you guys see your rent, that's not coming back down. For those who think that there's certain inflationary prices are going to come back down, it's not going to happen. There's certain things that are going to be priced in that's just going to stay fixed, because regardless of what, people are going to have to pay. And rent is one of them. Once people start getting used to paying a certain amount for an item, regardless of how much it costs, and if it's a must, if it's a need, people is going to pay it regardless. So we all know rent has gone up. That's not coming back down. We all know certain food items have gone up. That probably is not coming back down. Now, it might come down to a certain extent, but once these companies see that people are going to pay those prices and continue to pay those prices, they might not come back down. Now, of course, you might see gas come down. You might see some other things come down. But one thing I know for sure, rent is definitely will not be coming back. That is probably about the one guarantee. Everything else is kind of per se, but definitely if it comes to your rent, if you're renting, you know, after your landlord done raise their rent, saying that, well, he's not just gonna bring it down arbitrarily. It's not gonna happen. So.
The market, at least the futures pricing, is
and
still
this is all going to come full circle.
So I'm just saying, trust me. Pricing, I've watched how stocks have reacted, and we have this reopening. And I think it was said by somebody earlier, if these rate hikes come along with better growth, with a reopening of the economy, then I think they kind of negate each other. And so this hot, breathless, historic story, which is going to hopefully happen tomorrow, I think it will, is not that big of a deal for the market if we're looking at the worst case.
All right, so Steve, I got to jump in here. First of all, and let's use some Dave Matthews metaphors, and obviously I will be seeing the Stella Blues Band on November 12th at the Cutting Room. But again, we are ants marching if you look at the assets. And you talk about the Fed. I mean, let's be clear. They've tripled a number of markets have tripled or at all-time highs. We've seen, wheat prices today at all-time highs. We've seen copper prices at all-time highs. Housing prices are up 20% this year. A lot of stocks in the S&P have tripled off COVID lows. You've got a dynamic here where the Fed has pulled and goosed demand forward, arguably, to stimulate the economy, but you've left yourself where some of these yield curves may be, in fact, pricing in a world where the Fed has to come in, and unfortunately, they're going to overstep their bounds because they have no choice but to. And if you look at December 2015, December 2017, December 2018, these were all moments where the minute the Fed had to hike and do this hike that you think is somewhat benign. And I'm not angry with you. I'm a little frustrated that the environment is one where we can assess, and I agree with you, normalizing interest rates here is ultimately a good thing for society because it means that Pfizer and Merck and Moderna and all these companies that have done remarkable work have brought us back from the brink. But markets and asset prices come into this period at very elevated levels. And I'm not sure that's even fair to ask you to comment on because you're...
What he means by that is you have some companies that have been gone straight way above their pricing to the stratosphere because of what's been going on with the help of the Fed. So if rates become normal, you're going to have, like I said before, you're going to have some of these stocks go down and certain ones are going to go up. So it's going to kind of have a pretty interesting effect on certain markets, in certain commodity prices per se. You heard them talk about wheat, steel, the housing is up 20%, and yes, you might see certain commodities come down, but the housing price is going to be the key. Now, I said housing price as in homes being bought for mortgage. We're not talking about rent. Don't get the two mixed up. Do not get the two mixed up. Because rent and mortgage, the way how they are talking, when they talk about housing, it is not the same as renting. And whatever these landlords are charging now, let's not forget, some of these landlords couldn't pay no rent because they weren't getting paid from their tenants. So now they're going to have to raise rates to make up. So, and this is why, if you look at the rent dynamic in your area, I'm not going to even worry about, if you have a mortgage, because a mortgage don't matter. A mortgage, you have a mortgage. But depending on where you at in your area, you're going to see a lot of the rents raise, and a lot of them are going to be similar. So no matter where you go, it's not like you're really going to save any money in rent. Just a little heads up. And like I said, all this is going to come full circle when we talk about certain stock picks, I should say where to look at when it comes to stocks, and listen real closely what they're talking about, because it'll give you an idea of what sectors to go look if you're picking your stocks individually. Like I tell people, ETFs are the way to go. If you're not one of those people that like to pick out stocks, go ETFs, because ETFs have always been able to, are better than if you're individually picking Just some headline news. Lockheed Martin pairs with Verizon on 5G. So there's been enough uncertainty around Lockheed Martin to roll out military grade 5G. CEO, I can't even say his last name, Jim Tyslet. So last week had to rule out acquisition of a big telecom or tech company. So with the JV with Verizon announced today, including a shared R&D lab, at least provides a template for the kind of relationship that Lockheed Martin plans to explore rather than any return of ill-fated excursion into the satellite-based telecommunications into satellite-based commercial telecoms that it pursued in the 1990s. All right, so now you got Verizon teaming up with Lockheed Martin. If y'all don't know Lockheed Martin, they're the ones that make all the huge jets for the military and all that. So if you guys go look at the stock for Lockheed Martin, they're pretty high. And Verizon is kind of like trudging along, I think at $50-something a share. Also in other news and other deals I want to get to. Oh yes, I don't know if you guys watched Avis earlier. The rent-a-car Avis, but it looks like it got short squeezed today. And it ran up. If you guys didn't see what it ran up to, I'm about to show you right now. Let's see what Avis ran up to. How high did it get? Well, as you guys can see, at one point though, Avis ran up to $500 and something a share before it was circuit breakered, and now it ended up at $357. So it looks like Avis got the GameStop treatment. So as you can see, it ran up pretty high. So also let's look at Verizon. We talked about that earlier, where they are sitting at, and they're sitting at around 52, 57 a share. They also do give a dividend. And let's look at Lockheed Martin. That should be Lockheed Martin, LMT. Yeah, that's Lockheed Martin. Oops, wrong button, y'all. No, we don't want nothing for free. But there you go. Lockheed Martin is sitting at $326 per share. So, but as you can see, yeah, Avis was ran up. So if it is, so it was on a short squeeze today. So those hedge funds that was shorting Avis, they got hurt pretty bad today. All right, so as you guys can see, the Feds are preparing to taper. And then as you guys saw on the chart, in 2022, they're going to get ready to raise interest rates. Now, why is this important? Now, once again, if you have ETFs, you ain't got nothing to worry about. But if you're looking to pick individual stocks, now, depending on what your portfolio is looking like, everybody's strategy is different. But number one, like I said, I want stocks that give dividends. And with what's going on right now, actually, my portfolio is already kind of defensively set, because a lot of the stocks that I have gone up even during what's been going on through 2020 and up now. So, my portfolio has just been going up. And I will say next week, I will be showing you guys my portfolio and everything I've done, the progress of each stock and stuff like that. And I will be posting, on that day, I will be posting all my stocks and what I own and all the gains that I've had over time, so that when we talk about it here next week, the portfolio, you guys can see, and you know, you guys can let me know what you guys have in your portfolio as well. But yes, with everything going on now, I'm trying to see what other stocks I can pick up, because like I said in the market watch, in the market news here yesterday that I put out, I am really looking at IBM and I'm looking at Walmart. Right now, IBM is actually at a nice discount. And since everything is going technology wise, you gotta kind of want to have certain technology stocks. The big heavy hitters, you know, is Facebook, Microsoft, Nvidia. I include them in the chip space as well. You know, technology, software, you know, chip space type deal. With everything going so tech heavy, online heavy, cloud heavy, you know, you want to be in some type of position where, you know, analysis will say, you know, you want to take the best out of the bunch. But if you can't afford full shares, I always say fractional shares, hey, you still investing. So, you know, you want to kind of have the best out of the bunch. Me personally, I don't have Microsoft. I do not have Facebook. I have IBM. I have Intel right now. You know, and those are good and I'm hoping now that the chip shortage had made the US realize that they need to produce more of their own chips. That means Intel should be coming back to its full glory, hopefully. You know what I mean? And because they are building a whole nother plant. I believe it's in Arizona. So, and I believe Intel is the largest chip producing plant in the US as well. So there's that. And of course, IBM is a slugger. I would say old school, been around a long time, you know. So it's also making changes. And I'm definitely looking forward to them going higher in stock. But right now, IBM, let me show you guys IBM. If you guys are in the chat, I will be looking at the chat here in a second. But I just want to show you guys IBM. Right now, it's definitely, me personally, I hope they go lower. I hope they go to 120 so I can pick up more, because I did pick up some like at 130. I wanted to pick up some more, but we'll see what happens by the end of the week, because once these interest rates hit, maybe certain tech stocks might be taking a hit in the market, because a lot of them, you know, we have a lot of stocks that are overpriced. So let's see where that goes. Let me check the chat real quick. All right. So now let's look at, like I said, before we move on to the next segment, right? If you are picking your stocks instead of picking an ETF, make sure you understand the fact, number one, the Fed is going to decrease its buying of debt. Inflation is getting high, and I don't know if the Fed is going to be able to control inflation, or if they're going to bring the inflation down significantly where they wanted to initially. I don't know if it's going to work that way, because if they try to raise interest rates very aggressively, it might have a negative impact. Hence why they were stating earlier, those analysis were stating earlier, they don't know how the Fed is going to try to pull it off if inflation is above where their target point was to begin with. So, because, I mean, rising interest rates should offset inflation. Should. But that means if you have to aggressively increase interest rates just to kind of lay back off the inflation, how aggressive will they get? Is the market, you know, how will the market take it? You see what I mean? So it definitely is going to be something to wonder. So all right, let's and this is why I say, if you're a long-term investor and you're doing ETFs, it's not gonna matter. if you're picking solid blue chip companies that have proven themselves, you guys have seen the balance sheet, you ain't got nothing to worry about. So, but if what this does though, it kind of gives you a way to maybe get into some other stocks maybe for some reasonable price. So if you, like I said earlier, if you are handpicking your stocks, like I said, I've already given you a few examples. Verizon right now seems to be decent at the price that it's for. Like I said, IBM is another one. Intel is another one. Or, you know, kind of bargain basement prices per se. You know, for the because their leaders, the leaders in their sectors are kind of running away with it. But I believe IBM, and I've said this before about Intel and IBM, I think those two can be good recovery stories. You know what I mean? So, but let's go to, I wanted to talk about life insurance, right? Life insurance, everybody needs to have life insurance. And I had took a clip of this particular specific site. I took a clip of this specific site, and this right here, this little piece down here, the takeaways, where it says the investment portion of permanent life insurance grows tax-free. You can borrow against the cash value to buy a house or pay your college costs tax-free. Y'all heard what I just read, right? A lot of people don't understand that piece in there is very important, and it's something that I had to learn. I'm just now on game for like 2 days. I knew life insurance can do certain things, but you know, even myself, I am so late to you guys to understand is the whole borrow against cash value and tax deferred growth. That is what I wanted to hint at with you guys when it comes to, and especially if, you know, a lot of you are in your 20s. If you're in your 20s, you got a job, get yourself a life insurance policy, because by time then, 20 years from now, you have it, you know, built up. You can borrow against it, and you ain't got to go to no bank. You ain't got to worry about no credit. That's the thing. Your life insurance policy does not have a credit rating. It's just money you borrow and you just pay it back. You see what I'm saying? So it's just one of those things to keep in the back of your mind. You feel me? So, but that's what I wanted to talk about today, y'all. Not only the Fed is getting ready to taper, not only they're gonna raise interest rates next year, as you guys can see in the graph in the video, but also the importance of having life insurance. So it has very multiple uses. So, you know, every state is different, each insurance company is different, but ask questions. I'm telling you, it is you know, it's just one of those things to help grow your wealth, as well as not just investing, but life insurance, having another hustle, you know, reducing the amount of money you waste on BS items, you know, and material stuff that just is not going to help you. There's nothing wrong with, you know, having play money and whatever you pay yourself to go out and have fun with, but, you know, trying to make your money work, having your money work for you is, you know, the name of the game. You see what I'm saying? So, well, that is it for your boy. You know, the stream done reset so many times, I can't even keep count, man. So, but hopefully y'all have a good day. Y'all be safe. That's it for another Financial Corner, man.